This video will help to explain the methodology behind Fitch's annual transition and default studies. A transition default report analyzes historical credit rating changes and default frequencies. Transition matrices show the historical likelihood of rating migrations. The report provides default rates to assess risk of credit investments. It's intended for credit analysts and risk managers to track creditworthiness, as well as institutional investors and asset managers to assist in making portfolio decisions, and regulatory bodies for economic oversight and compliance. It is essential for credit risk assessment and investment strategy. It aids in understanding market dynamics and economic indicators, and it influences pricing, valuation, and capital requirements for financial entities. Transition and default covers the main sectors of the debt capital markets, including long-term issuer default ratings for corporates, financial institutions, sovereigns, international public finance, long-term ratings for global infrastructure and project finance, U.S. public finance, and structured finance. To calculate transition and default rates, cohorts or static pools are created for each year. The cohorts are created by grouping the ratings by category at the start of each year. Membership remains constant over time. For example, ratings outstanding at the beginning of 2023 constitute the 2023 cohort. Issuers or issues newly rated by Fitch Ratings in any given year are included in the following year's cohort. Ratings may reside in multiple cohorts if the ratings are outstanding at the beginning and end of the year or multiple year horizons under observation. Only the last rating change within that particular year is reflected. Withdrawn and defaulted entities are excluded from future static pools. However, these will be accounted for in the respective paid in full or withdrawn columns for the year in which these were recorded. Transition rates measure rating changes from the start to the end of the period. One-year transition rates are calculated by comparing entity ratings year on year. Entities rated in multiple years appear in each transition matrix. The header or horizontal column shows the rating category at the end of the current year as a percentage. For example, in 2022, 72% of the AAA ratings at the previous year end are still AAA. The stability of each rating is shown as a percentage diagonally across the matrix. Above or to the right are the percentage of downgrades. Below or to the left are the percentage of upgrades. The D column shows the percentage of defaults by category for the period. The WD column shows the percentage for the period that were withdrawn. For example, on January 1st, 2023, there were 1,368 BBB category issuers outstanding in the cohort. On December 31st, 2023, 91.96% remained BBB, 3.14% upgraded to single A category, while 0.07% downgraded to D. Average annual transition matrix reads the same way as an individual cohort matrix, but is calculated differently. It is calculated as the weighted average transition of all prior cohorts. For example, the average 3-year transition matrices would be the result of comparing ratings at the beginning of the years 1990 to 2021 with the ratings at the end of the years 1992 to 2023. Structured finance contains 2 additional columns since it is a count of issues and debt. C and below reflects the structured finance impairment rate as a percentage or ratings downgraded to CC, single C, D, default, or near default. PIF shows paid in full rates as a percentage for period. D or default ratings indicate an issuer that, in Fitch's opinion, has entered into bankruptcy filings, administration, receivership, liquidation, or other formal winding up procedure, or that has otherwise ceased business and debt is still outstanding. First, defaults are examined by year for each cohort and individual rating category. For example, if 25 issuers defaulted in 2002 and that cohort consisted of 2,000 issuer ratings, the resulting annual default rate for all ratings in 2002 would be 1.3%. If 10 of these defaults consisted of defaults among issuers rated BB at the beginning of the year, and the BB cohort at the beginning of the year totaled 500, the BB 2002 default rate would be 2%. From these annual default rates, Fitch derives average annual default rates by weighting each cohort's default rates by the number of ratings outstanding in the given cohort relative to the number of total ratings outstanding for all cohorts. Following the example above, the 2002 BB annual default rate of 2% might be followed by a 2003 BB annual default rate of 1%. A straight average of these two rates would ignore potential differences in the size of the two cohorts. Rather, weighting the results based on the relative number of BB ratings outstanding in 2002 and 2003 gives greater emphasis to the results of the BB cohort with the most observations. The same technique is used to calculate average default rates over multiple year horizons. The rates are based on historical data and are not an indication of probability of default.